Alright, what's up everyone? Today we're going to be clearing up the breakup structure, the market structure shift, and the CISD. What are their difference, what are they used for, and what do they mean? So, I have a bunch of confusing shit on the screen right now for you, but don't worry, we'll get right into all of that, okay? So, we're going to start off with this here. So, a breakup structure is a trend continuation, meaning that if the trend is going up, it's the structure breaking to continue that trend. So it makes a high, it breaks that high. It makes a high, it breaks that high in an uptrend. In a downtrend, it makes a low, it breaks that low. It makes a low, it breaks that low. Okay? So here we're in an uptrend, as you guys can see. We have a higher high, a higher low, a higher high. Where's the breaker structure? Right here at the previous higher high. And then we have a higher low, and then we have a higher high again. Now we have a lower low, a lower high. This means we're now in a downtrend. So what happens when you make a new low? Breakup structure from the previous low. Okay, that's the breakup structure. You need a trend, and it's trend continuation. Now, the market structure shift is pretty much a breakup structure, but it's the one that changes the trend. It's a structure shift. It's you switching from bullish to bearish, from bearish to bullish. In this case here, it's right there. You take that previous low again. So you to continue the bullish trend, you're making higher high, higher low, higher high, higher low. You're making the last higher high, and now you're breaking the higher low to make a lower low. That's the market structure shift at the previous higher low. Okay? And then you're going to your lower high, lower low, right? Again, break of structure, trend continuation, market structure shift, trend reversal, breaking, whatever you want to use. Okay? In the real charts here, I have the same exact thing that's here, here. Higher high, higher low, higher high, breaker structure, higher low. Higher high, breaker structure at the previous higher high, higher low. Right? Technically, because this is kind of a significant low, this right here is also a higher high and a breaker structure, but it's not as clear, right? This is not like the best one, but it's still valid. So there you go. Then what happens here? You make a higher low again. Do we agree? And then right here, bang, we fail to make the lower high. Okay? So what does that mean? Once we break this higher low, I actually messed up. That's on me. The market structure shift is right here. So once we break this, market structure shift because we just made a lower low, right? Higher high, higher low. Trend is still bullish at this point. Lower high. Oh, small indication the trend might be switching. We have no more strength to go higher. Massive lower low. Big, massive structure, market structure shift right here. And then what do we do after that? Lower high, lower low, lower high, and then equal low, higher high, and then lower low. This is a whole other thing. It's a liquidity sweep most likely, or just I don't even know about that. We're not this is more what I'm trying to say is that this is a little more advanced. Right now what we're looking for is the difference between market structure shift, breakup structure, and change in the state of delivery. Okay? Because I know you guys have been seeing the change in the state of delivery everywhere. I use it myself sometimes too. But the base of the base is the breaker structure and the market structure shift. Now that we've established, we know what those are, right? One's a trend continuation, one's a trend reversal. This is literally all you need to know, pretty much. We're going to get into the CISD. Now, the change in the state of delivery, I personally use it most of the time with fair value gaps. So this is the example I'm going to give you. You can also use it with previous day highs. It's the same concept. I just don't like it as much, okay? So you have your fair value gap. This is a bearish fair value gap because we have up candles going into it. The first candle, okay, this is going to be really complicated. You guys might want to write this down. The first candle that pokes in the fair value gap, the whole leg is what you need to break. Now, I'm going to give you guys an example in the chart so you guys understand, okay? So, right here, we have this fair value gap here, right? So, you see how this thing has 3 taps into it? The first tap, the first one is right here. Are we all in agreement? So, that whole leg until a candle of the other direction happens. So if you have a bearish fair value gap, like this example here, and a bullish candle pokes through, the series of candle until you get to a bearish candle, that's considered the bullish move to tap into your fair value gap. So the change in the state of delivery is at the bottom of this. So this is a bullish candle. This is a bullish candle. If you have a bearish candle right here like this, right? This would be a bearish candle. Slightly unrealistic though because it needs to have closed right here. There you go. This is a bearish candle. Your change in the state is at this low. If this bearish candle had gone like this with the wick, right? Your change in the state would be right here. But if you have another bullish candle here, right? This is a bullish candle. I'm gonna put this whole thing red. Hold on. Let me make it easier for you guys. A little bit easier. Understand? All right. So this is the only bearish candle, but that's where the change in the state of delivery is. Again, if this thing had gone higher than this, the change in the state would be here, not here. It's the whole cluster of candle, the lowest point. That's the change in the state of delivery, okay? So let's say you're on a 15-minute time frame and this is what you see. This is where your change in the state of delivery is. If it's like this is where it is. If it's like this, weirdly enough, this is where it is, okay? The lowest point of the clustering of candle until you see a candle of the opposite direction. Meaning, if you have bearish candles poking into a bullish fair value gap, it's the same thing. I'm going to show you guys right here. Imagine if you will that there's a bullish fair value gap here and this candle goes into it, right? This is the candle that poked through right here. The first candle that poked through is this one. Are we in agreement? Okay. The change in state would be where? At the highest point of the first candle of the previous or of the other direction, which means this is a bearish candle poking into a bullish fair value gap. So you go bearish candle, bullish candle. There you go. This is where, and this is the high. So this is where the change in the state of delivery would be right here. Okay. Now, if this candle had wicked higher, then it would be here. It's like it's semi-complicated, but it's kind of simple once you get it, right? So again, right here, this is the highest, this is the first tap into the fair value gap. Once this tap happens, you guys need to not give a fuck about all of this, okay? You put your changes in state and you wait for it. So right here, bullish candle, bearish candle, low. Bit lower than what I put it. It's just hard to be accurate. Okay, and there you go. And now you need a candle closing below this to confirm the change in the state. When does that happen? Right here, and you get your little retrace right here, probably on the lower time frames, and bang, you tap right in. Easy trade, right? So change in the state can happen in any trend. It doesn't need a break of structure because, like, let's say you take this low here, right? This is um a higher high right here. Technically, your trend is bullish at this point. Higher high. You have your higher low right here, and your higher low right here, right? So where's your break of structure? Your market structure shift slash break of structure is right here. Where your CISD is right here, and then your break of structure is right here. So what does that tell me? That tells me that all three of these things are different. You guys need to rely on specific things for specific times or whatever. And this this is on any single time frame, by the way. So once you're in an uptrend and you bet the market is going up, you need a break of structure, right? If you're in an uptrend and you bet the market is going down, you need a market structure shift, right? If your trade taps to a fair value gap and you want to make sure that we're going back in the direction you want to go, you need to change the state of delivery into your direction, right? So you guys need to figure out what you guys want to do in the chart or what you guys want to trade, like where you want the market to go, where you think it's going to go, what your confluences are, and then you need to decide for yourself what you're putting in your strategy and what you're not putting in your strategy. Okay? Me personally, I do not give a shit about breaker structure and market structure shift. I do not trade them. They probably happen in my strategy by themselves, but I don't actively look for them. I do trade the CISD though. Other than that, guys, make sure you guys go on the charts, do exactly what I did. Mark out the high, mark out the low, mark out every single higher high, higher low, lower high, lower low, whatever. Your trends, anything you want to see, where your breaker structures are, where your market structure shifts are, where your change in the state of deliveries are. You guys can send me your pictures with everything marked out. I'll tell you exactly what you're doing wrong, what's right. If you're right about everything, it's perfect. and stuff like that. And other than that, guys, I'll catch you guys later. And yeah, don't forget to like, comment, subscribe, follow me on the TikTok, Instagram, YouTube, join the Discord, bunch of different things. Yeah, catch you guys later. Love you.